Capital Logic. Today's case study, Lululemon. How grassroots community marketing and local yoga instructors built a premium athletic empire before spending on ads. We're going to show you exactly how this business model works, where the money actually comes from, and what most analysts miss. Like and subscribe if you want this kind of breakdown every week. Here is what you need to know. Lululemon became a global athletic wear powerhouse with a multi-billion-dollar valuation. It spent virtually nothing on traditional advertising for its crucial early growth. How did they do it? How do you build a premium brand that commands loyalty and high prices without the usual marketing spend? Stay until the end. I'll break down 3 lessons from Lululemon's playbook you can apply to your business this week. If you want business breakdowns you can actually use, hit subscribe and the bell. In the late 1990s, the athletic wear landscape was dominated by giants like Nike and Adidas. Their strategy was clear: massive advertising campaigns, celebrity endorsements, and a focus on competitive sports. But in Vancouver, Canada, a former snowboard executive named Chip Wilson saw something different. He saw a burgeoning wellness movement, a quiet revolution happening in yoga studios, and an unmet need for technical athletic apparel designed specifically for women. This wasn't some grand corporate strategy cooked up in a boardroom. This was a man, Chip Wilson, who in 1998 started Lululemon Athletica, incorporated as a design studio by day and a yoga studio by night. Think about that for a second. A clothing company born inside the very community it aimed to serve. This wasn't about selling a product. It was about solving a problem for a specific, passionate group of people. Wilson noticed that cotton yoga, where retained sweat, became transparent and simply didn't perform. He envisioned something better to something technical, comfortable, and flattering. This vision led to the development of Lawn, a proprietary fabric introduced in 2000. It was a blend that offered cottony softness, incredible stretch, and crucial moisture-wicking properties. This wasn't just another fabric. It was a competitive mode, a unique selling proposition that competitors struggled to replicate. The first standalone Lululemon store opened its doors in November 2000, not in a glitzy mall, but in Kitsilano, a health-conscious neighborhood in Vancouver. It focused almost exclusively on women's yoga apparel. This wasn't a mass-market play. It was a laser-focused approach targeting a niche community that was hungry for specialized gear. The brand's early decision to locate its stores in these high-traffic, health-conscious neighborhoods, often near yoga studios or fitness centers, wasn't just a coincidence. It was a foundational element of its grassroots impact. Now, here's where Lululemon's story takes a truly counterintuitive turn. While its competitors were pouring millions into Super Bowl ads and glossy magazine spreads, Lululemon did almost the exact opposite. For its initial growth phase, the company famously eschewed traditional advertising. No billboards, no TV commercials, no celebrity endorsements. Instead, they invested everything in what we now call sweat equity to building brand through community. The core of Lululemon's early marketing strategy was disarmingly simple, yet incredibly powerful. They gave away free apparel. Not to A-list celebrities, but to local yoga instructors, fitness professionals, and community leaders. These were the true influencers of the time, the people who guided classes, shaped trends, and earned the trust of their students. Lululemon turned them into brand ambassadors, long before the term influencer marketing was even a buzzword. Imagine a yoga instructor, respected and admired, teaching a class in Lululemon gear. Her students see the quality, they see the fit, and they trust her endorsement implicitly. This wasn't a paid advertisement. It was an authentic recommendation from someone they looked up to. These educators, to a term Lululemon used for both its store employees and its community ambassadors, were trained to foster genuine relationships with customers. The goal wasn't just to make a sale, but to create a sense of belonging. The stores themselves became community hubs, offering free yoga classes and hosting wellness events. It was an experiential retail model years ahead of its time. By 2005, Lululemon had expanded to 30 stores, almost entirely through this word-of-mouth strategy and deep community engagement with virtually no traditional ad spend. Think about that. 30 successful stores, a rapidly growing brand, built on authentic connections, not expensive campaigns. The brand's early success created a powerful network effect. As more local instructors wore Lululemon, it signaled legitimacy and desirability, encouraging others to adopt the brand. This community-first approach wasn't just about getting people to wear the clothes. It was about co-creation. Lululemon's product design often incorporated specific feedback from its community ambassadors, ensuring the gear met precise athletic needs. This created a profound sense of ownership and loyalty among its most important advocates. Later, in 2012, Lululemon formalized this with its Sweat Collective program, offering a 25% discount to fitness professionals. This wasn't just a perk. It was a sophisticated network effect strategy that turned instructors into brand advocates and, crucially, product testers. But here's the thing that really sets Lululemon apart, and frankly, baffled many competitors: its pricing. From the outset, Lululemon positioned itself as a premium brand. A pair of women's Align leggings, for instance, typically retails for $98 to $118. Compare that to competitors like Old Navy, where you might find leggings for $20 to $30. How did a brand with virtually no traditional advertising convince people to pay 5 times more for a similar item? This wasn't just about superior quality, though the proprietary Luon fabric certainly played a role. This was a masterclass in the psychology of scarcity and status. By setting prices high, Lululemon immediately created a perception of exclusivity and high quality. It leveraged a fundamental psychological principle, the price-quality heuristic, where a higher price often implies a better product. When you pay $98 for leggings, you expect them to be exceptional. And Lululemon delivered on that expectation, not just with the product itself, but with the entire brand experience. The entire brand experience. The brand cultivated a cult-like following, with customers often read to as Lulu addicts. This wasn't just about buying clothes. It was about buying into a lifestyle, an aspirational vision of wellness and personal growth. The community Lululemon built fostered a sense of belonging and identification with the brand values. When you wore Lululemon, you weren't just wearing athletic gear. You were signaling that you were part of an exclusive club, a community dedicated to health, mindfulness, and an active lifestyle. This wasn't about mass appeal. It was about deep, meaningful connection with a targeted demographic of affluent, educated women aged 25 to 45. The brand's manifesto bags, printed with inspirational quotes, served as another subtle, non-traditional marketing tool, reinforcing brand values and sparking conversation. It was all part of a cohesive strategy that built desire and loyalty without ever needing to shout from a billboard. By the time Lululemon went public in 2007, just 9 years after its founding, it had 60 stores and reported net revenue of $275.8 million. That's rapid growth, fueled almost entirely by word of mouth and community engagement. Competitors often missed this crucial point. They saw Lululemon's success and tried to replicate its product lines, but they failed to understand the underlying social capital strategy. They focused on what Lululemon sold, not how Lululemon sold it. The premium pricing, the innovative fabrics, the aspirational wellness message, these were all powerful elements, but they were amplified exponentially by the authentic grassroots community that Lululemon had so carefully nurtured. It created a powerful cycle. The premium price reinforced the perception of quality. The quality delighted customers, and those delighted customers became enthusiastic brand advocates within their trusted communities. This wasn't just marketing, it was a movement. But even a brand built on such a strong foundation isn't immune to challenges. In 2013, Lululemon faced a major recall of its Luon pants due to sheerness issues, costing the company an estimated $67 million in sales and damaging its hard-earned reputation for quality. It was a moment that could have crippled a lesser brand. Yet, Lululemon recovered. How? Because of the deep loyalty and community ties it had so meticulously built. The brand's customers, the Lulu addicts, largely stood by it, demonstrating the resilience forged by its unique grassroots strategy. It was a testament to the power of authentic connection, proving that a strong community can weather even the toughest storms. This unwavering customer loyalty, combined with a relentless focus on product innovation, allowed Lululemon to continue its trajectory. They weren't just selling yoga pants anymore. They were building an empire, one community connection at a time. And as the brand grew, so did its ambitions. But how do you scale that kind of intimate, community-driven approach? How do you take a strategy built on local connections and word of mouth and turn it into a national, then global phenomenon? This is where Lululemon's story truly becomes fascinating. By 2005, just 5 years after opening its first standalone store, Lululemon had expanded to 30 locations. Think about that. 30 stores, primarily through word of mouth and community engagement, with minimal traditional ad spend. While competitors were pouring millions into glossy magazine ads and celebrity endorsements, Lululemon was investing in relationships. They were hosting free yoga classes in their stores, turning retail spaces into community hubs. They were designing products based on feedback from their educators and local ambassadors, creating a sense of co-creation that fostered deep loyalty. This wasn't just selling clothes, it was selling a lifestyle, an identity, a sense of belonging. The brand's premium pricing, with a pair of women's Align leggings typically retailing for $98 to $118, wasn't a deterrent, it was part of the allure. It signaled exclusivity, quality, and aspiration. This leveraged a powerful psychological principle, the price-quality heuristic. If it costs more, it must be better. And with Lululemon, often it was better. Their proprietary lawn fabric, introduced in 2000, was a game-changer to a unique blend offering cottony softness, stretch, and moisture-wicking properties that competitors simply couldn't replicate at the time. This technical innovation, combined with the social capital built through their community strategy, created a powerful competitive moat. The network effect was undeniable. As more local instructors wore Lululemon, it signaled legitimacy and desirability. It became a uniform, a badge of honor within the fitness community. And this organic, authentic endorsement was far more powerful than any paid advertisement. By 2007, the year of its IPO, Lululemon had grown to 60 stores and reported net revenue of $275.8 million. This wasn't just growth, it was profitable growth, built on a foundation of genuine connection rather than fleeting trends. Their average revenue per square foot was approximately $1,600 in 2019, significantly higher than the retail industry average of around $300 to $500, a testament to the efficiency and loyalty their model generated. Of course, no journey to the top is without its bumps. In 2013, Lululemon faced a significant challenge, a major recall of its Luon pants due to sheerness issues. This wasn't a minor flaw. It was a fundamental problem with a core product, costing the company an estimated $67 million in sales and damaging its reputation for quality. For many brands, such a misstep could have been catastrophic. But Lululemon's deep investment in community paid dividends. Their customers, often referred to as Lulu addicts, had a strong emotional connection to the brand. They felt like part of the family, and that loyalty helped Lululemon weather. This period also marked a strategic evolution for the company, recognizing the need to diversify beyond its core women's yoga, where Lululemon began its strategic expansion into men's apparel around 2013. This wasn't just about adding new products. It was about broadening its market appeal while staying true to its sweat life culture. They also formalized their ambassador program, which by 2019 included over 1,500 global ambassadors, and introduced programs like Sweat Collective in 2012, offering a 25% discount to fitness professionals. These initiatives further solidified their ties to the fitness community, turning instructors into brand advocates and product testers, ensuring organic endorsements continued to flow. This wasn't just marketing, it was a sophisticated network effect strategy. Lululemon was no longer just a yoga brand. It was a lifestyle brand. This shift continued with ventures beyond apparel. In 2016, they launched Self-Care, a line of beauty products. Then, in 2020, they made a bold move, acquiring home fitness company Mirror for $500 million. This was a clear signal of their ambition to create an entire ecosystem around wellness and personal growth, extending their brand reach into new dimensions of their customers' lives. This diversification, however, was always underpinned by their core strengths: product innovation and community. Their investment in research and development for fabrics, like Everlux and Nulu, continued to create proprietary materials that were difficult to replicate. And their focus on the in-store experience, with free classes and community events, transformed retail spaces into hubs for connection, not just transactions. The results speak for themselves. Men's revenue grew to $2.3 billion in fiscal year 2023, a 15% increase year over year, demonstrating the success of their market expansion. Overall, Lululemon reported net revenue of $9.6 billion in fiscal year 2023, a 19% increase from the previous year. And critically, their gross profit for fiscal year 2023 was $5.7 billion, representing a remarkable 59.4% gross margin. This isn't just selling a lot of products, it's selling them at a premium, maintaining strong pricing power and efficient operations. In 2019, Lululemon unveiled its Power of Three growth strategy, aiming for low double-digit annual revenue growth through product innovation, market expansion, and digital growth. This was followed by the Power of 3x2 plan in 2022, targeting a doubling of revenue to $12.5 billion by 2026. These ambitious goals aren't built on traditional advertising blitzes, but on the continued evolution of the very strategies that got them here: deep customer understanding, community engagement, and relentless product innovation. So, what can we learn from this journey? How did a company that famously avoided traditional advertising for its initial growth build a multi-billion-dollar empire and continue to thrive in an increasingly competitive market? The answer lies in a few counterintuitive principles that Lululemon mastered, principles that most businesses either overlook or simply get wrong. Now here are 3 lessons from Lululemon's playbook you can apply to your own business. Lesson 1. Build community, not just customers. Invest in grassroots engagement and local ambassadors to create authentic connections and word-of-mouth marketing. Lululemon didn't just sell yoga pants. They cultivated a lifestyle, a shared identity that resonated deeply with their early adopters. They understood that a loyal community is far more powerful and cheaper than any traditional ad campaign. Lesson 2. Differentiate with premium quality and experience. Focus on innovative, high-quality products and an elevated in-store experience to justify premium pricing and foster loyalty. Lululemon proved that people will pay a premium for exceptional design, durability, and a shopping environment that feels exclusive and aspirational. They didn't compete on price. They competed on perceived value and an unparalleled brand experience. Lesson 3. Evolve beyond your core offering. Continuously explore market expansion, new demographics, product lines, or ecosystem plays to sustain growth and relevance. Lululemon started with women's yoga wear, but shrewdly expanded into men's apparel, accessories, and even fitness tech. They understood that standing still, even with a successful core product, is a recipe for stagnation. If you want more business breakdowns you can actually use, subscribe. I'll see you in the next one. That is Capital Logic's breakdown of Lululemon, how grassroots community marketing and local yoga instructors built a premium athletic empire before spending on ads. Every business has a hidden architecture. We find it, we explain it, and we show you what it means. Subscribe and hit the bell so you never miss a case study. We'll be back with another one shortly.